Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, October 5th through Friday, October 9th, 2009. Well, folks, it was an unbelievably wild week. We're going to go into all the technicals of the charts and really dissect the charts overall. But first, let's cover what really happened last week. What happened to these markets that caused them to first rally on Monday substantially and then basically drop the rest of the week? Because we did see a nice solid up day on Monday. The Dow was up about 125 points, but overall, the market had a big down week. And we saw that really climax on Thursday. And then we had a little bit of a down day on Friday, just a minor down day, kind of a pause day of what we refer to after a major day. Friday, the Dow was down 21.5, the Nasdaq down about 9.5, and the S&P 500 down about 4.5 on the day. That's basically 0.2% to 0.4% across the board. But the key again of last week was to understand Monday's activity. A lot of people out there, including analysts on TV, and this is really why we avoid the Wall Street hype. That's our motto. But a lot of analysts on the street, a lot of people on TV came out after Monday's big update and said, "Oh, this market is going to go higher. You have to be bullish." And we sat back and said, "You know what? We see a major cycle downturn here. You have to look for the markets to go down. This is way overbought. You have to look at the key technicals of the charts. In addition, the volume was a key indicator on Monday. A lot of people missed that. Volume on Monday was the lightest trading day of the year. You have to take that with a grain of salt. That means that there's literally no participation based on the holiday on Monday. And then in addition, you knew you had window dressing. Window dressing, especially after an up move like we've had, you know that people are going to be money managers, hedge fund managers are going to be accumulating key stocks like JP Morgan, Goldman Sachs, and those are going to drive the market up, and that's exactly what happened. So when you have the lightest trading day of the year or light volume, the markets, again, we always talk about this, have the propensity to go higher, and that's exactly what happened on Monday. Now, Tuesday came in, and again, we can show you on the charts here. Let's go over the charts so you can see exactly what happened here. Going back to the 28th, this is Monday. You see a beautiful up day where we move all the way basically back to this 106 and change level, and that was the bottom line here again. And I can show you the charts right up here, 106.40. We hit, and then you started to come back into the close a little bit, but still a very, very solid up day. Tuesday started on a very positive note with the market ripping higher initially all the way to the 107 level. That was a key resistance level. Every line that I show you on these charts is a master or key level, all right? The key levels are the ones that are one single line. The master levels, I'll show you in a minute, are double lines or multicolor lines, and I do that to purposely show you that they're bigger levels. But again, Tuesday, you can see the initial gap up in the market following on the back of the big move on Monday, and then all of a sudden the market starts to fall back in. We get some consumer confidence news that is not so bullish for the markets, and it was really the first crack in the glass at the beginning of the week where really we saw the rest of the week, the major economic news was very, very bearish, all the way through the jobs number on Friday, where we lost over 250,000, a little more than expectations. The unemployment rate staying at 9.8%. Here's Wednesday, folks. Big drop on that 945 data, manufacturing data. Market just cascaded lower. We had that monster reversal, but then the key here, the reversal did not hold all day, and you were able to come back in, and that was a good showing of what to look for, and the markets did close lower that day, and then all she wrote was on Thursday, folks. Thursday was the big down day. We just had an unbelievable drop. Here's Thursday, following on the back of that little bit of a pullback on Wednesday as the market really came in very, very hard, closing at the lows of the day. Now, here's the master level. You can see this one right here at 104. That is a master level. We refer to these as major levels because when you hit them, then you have a propensity either to close below them, which signals a move to the next master level, or if you hit them and bounce, then you can actually have a very, very solid bounce. The interesting thing is if you actually go back here all the way back to a week ago from Friday, so not this past Friday, but a week prior, you can see 104. Here we hit it. This was a master level, and look at the bounce that happened. And again, last weekend's video, you can see I discussed this in depth and talked about how the bounce off of it occurred, and you can see that master level getting hit right there at 104. And look at what happens. From 104, we move all the way back to 107 on the charts. That's a 3-point bounce on the SPY. So you have to know these master levels. This is something we spend a lot of time going over in the Research Center videos to our premium members. Now, going to current times, let's scan all the way back to current times. Here's Thursday, here's Friday. What you had to know about Thursday was this. We came down to 104 on this candle, bounced off of it, and then we actually broke it. What that does is signal a key breakdown in the markets that can tell you the market will go to the next master level. What was the next master level? It was 102. 102 we've been talking about and giving it out to our premium members for over 2 months now, all the way going back since the first time we came up into it. We talked about it. Once we got above it, it became a master support level. Up until then, it was a master resistance level. So here you can see we break below that level, go retest it. Notice how you can't get above it on Thursday and you come back down. Then you go up again, still can't get above it. That's a very bearish signal. It's telling you you're not recapturing, and most likely you will head to 102. And we had told that on Thursday night to go into Friday that 102 level would be a master level. And by the way, first hit of a master level can always be bought. Just like going back to a week ago from Friday, this level could have been bought for a 3-point pop on the spiders. Look at what happens. You finally break 104 and you go down to the next master level on a gap down on Friday. That's a master level. It can be bought. Sure enough, right off of that, look at that. A $1 bounce on the SPY. You may even get more out of it next week. We'll have to watch and see. Again, we have projected out to our premium members, but that's for them and them alone to know. So again, know your levels. Every level on this chart that I have as a straight line is a very important level. The master ones are obviously the biggest ones you have to watch more for a closing basis than anything else on an intraday. But even an intraday gap down right there, it's good to get a bounce. It's that powerful of a level, folks. Again, these are cycle calculated, mathematical calculated, trend lines, you name it. It comes into play here. That's why we've talked about them based on all time frames showing that these levels are key. So again, there you have Friday's activity. You can see off of that 102, you get a bid right up to 103, you pull back to 102.50, and then you kind of just bounce around the 102.50 to 103 into the closing just about around that 102.50 level right here. All right, now going into next week, what are we looking for, folks? Well, first of all, next week is going to be a very, very quiet week in regards to economic news. Monday, you have the ISM services number. That could be interesting because the last ISM number for manufacturing was actually not a very good number, caused some selling in the market. So watch that one on Monday. Tuesday, nothing. Wednesday, crude inventories. Thursday, initial claims. Initial claims will be big. Really, Thursday and Friday, you'll have some important data coming out, and it will be interesting to see where this market goes. Also, this week, you're going to begin to get earnings announcements. All right, the key earnings that are going to be looked for here, you have Pepsi, which could be interesting. It's not going to be a major market mover, but it will be something to watch. The key one here is going to be Alcoa. AA, symbol AA. Alcoa will be big. Also, Costco reports next week. Monsanto, Mosaic, and Marriott. A couple of these key ones will be very, very interesting because it's our first look into the window of the third quarter earnings, all right? And that's going to be key for this market. So again, a little light on the earnings front, although you're starting to get the key numbers. As we get into the next few weeks, you're going to have more and more earnings, and some of the big companies like Apple and IBM and the rest of them will start to report. Those are going to be the big ones. Next week, we're going to kick off earnings, though, with Alcoa. Alcoa will be something that will drive the markets one way or the other. And again, it's going to be all about what they earn, obviously, but then their expectations going forward. Now, let's quickly go to the chart here on the 60-minute. I wanted to show you the chart here on the 60-minute. You can see the master level here at 102, and look at the bounce back. You can see what's happened, really. We had a beautiful M top, we called. Then you have a nice A pattern all the way down here. Where does the A pattern take us? It takes us to the master level of 102. Know your levels, folks. Know your levels. Again, the key is to come join the research center or the chat room. Again, we have a webinar today as well. That's already over. You have to wait for the next one at this point, but continue to watch. We schedule one every couple weeks. Continue to watch the website. Those people that are learning this stuff in the webinar right now will be 10 times more prepared for Monday's trading and be 10 times more profitable, or even more so than they were prior to that webinar. All right, folks, have a wonderful weekend. Enjoy yourselves. We will talk to you on Monday. Come join the research center. It includes everything under that. Nailed tons of calls this week in there. Again, tons of money you're leaving on the table for $49.99 a month. It's scary. Take care. Talk to you soon.